Good afternoon, everyone. Welcome back to another video. It's been a long time since I made a video for you, almost a month. And what an insane month of price action. March month was totally crazy. From the lows of 21,900 approximately, or 22,000, we made a high of 23,869, right? Nearly 1,300 plus points move came in the market. This is crazy, definitely. But if you look at the monthly chart, right? If you look at the monthly chart, it is almost similar to the previous month, almost similar to the previous month. The previous month high and low broke in the next candle, right? So, what now? That's the important question. If you have seen the portfolio video where I told you we were expecting a drop to come in the market and we wanted it to come towards at least your 38 to 50% zone, right? 38 to 50% zone. We wanted it to come till here. Many people ask me the same questions. Is the market bottom done? All right. We'll discuss that. We'll discuss that going further. We have different series of videos. I'll give you an update in a portfolio video different. But this video, I want to start the small history lesson of what happened in the month of March, and we are going into the month of April. What do we expect in price action? How to see? Most of you, those who are following the Telegram group, if I have not been able to update videos on YouTube, I have been updating every single step in the Telegram group. Now, the first message in the Telegram group I want to highlight is that on the 25th of Feb, market was nearly in a breakdown, right? We had a small gap down from our minor time cycle. This is nothing but your time cycles, which I shared in the new year, your NIFTY annual time cycles. We had major and minor time cycle zones. We had the major time cycle here, right? One of the major time cycles in Feb month. This gave us a major breakdown, right? Towards the end of Feb, Jan, first week of Jan, we had a major breakdown. We had, obviously, in a smaller time cycle, we caught this because we know market was going to turn here. And this was the end of one of the major cycles. Question here was whether market has done inversion, right? So to confirm that, we had to wait till the end of the time zone gets over. Something similar happened in this zone here, right, in the month of March. We'll discuss that. Before that, we'll discuss what happened in the Telegram group, because I wanted to give you a small breakdown of how we were analyzing each and every step of the way using time and price. Now, first message, which I told you in the 25th of Feb, we were somewhere trading here, right? If market breaks down, right, if there's no pullback, if market breaks down the level of 22,367, my only question was, what is there near the level of 22,022? This was a fancy number, right? Or what is there near it? So it's not a big deal. I'll tell you really, those who are following my videos, only two people have given me the correct answer. So what is there is that there's nothing but there's a FRVP zone. Now, FRVP zone, I've told you so many times, it is a crucial zone, especially those who study levels, those who study price action, those who want to know where market can turn from. You have to look at FRVP zones, right? The FRVP, nothing but fixed range volume profile. You can check out the two videos I've shared, one for analyzing levels, one for analyzing traps. All right. Settings, everything I've shared. So there was one FRVP zone here. Let me just show it to you. Right. So this FRVP zone is coming from the June 4th, your election day drama. All right. The June 4th election results drama. From there, this level is coming. There's another higher time frame FRVP zone, which is exactly combining with this. But if you see this, we are approaching an FRVP zone. POC of that zone, 22,015. It can be 22,009, depends on what time frame you're switching. But again, approximately, it is near the fancy number 22,022. All right. Next, on the 3rd of March, before the low was made, on the 3rd of March, we were trading in this FRVP zone, right? I've given the key dates for March. Key dates for March was your 12th, and 13th March, that one time zone here, 12th and 13th. And the next key was your 24th and 25th. 24th and 25th, right? We had these dates from 3rd of March itself, plus we had the time cycle zones, right? Annual time cycle zones, which in the annual video I've shared, the time cycles video I've shared, we had all these dates from the beginning of the year itself. Next, 4th of March. 4th of March, a simple message was posted in the Telegram. As per the time cycles, the smaller time cycles, we have to see anytime a reversal can start, right? We can see a reversal anytime from 4th to 6th towards the 12th. Now, if you remember, this was peak bearish pressure. Every single one were thinking only about breakdown, breakdown, breakdown. There was no hope for bulls. There was literally no hope for bulls, right? Everyone by this time had a strong belief that no matter what you do, sell off is going to come again, right? So this is how time and price works. At exactly 4th of March, we had a bottom in the market and we had a rally. Okay. Now, towards 10th of March, somewhere here in 10th of March, we were already in one of the time zones. So now what is this time zone? As per the time cycle zone, L means low. As per normal cycle, low. Now, normal cycle, and what is a normal cycle? What is an inverted cycle? Normal cycle, I've already explained this. Normal cycle is as per your regular time analysis, what expected turn or swing do you expect? That is normal. What is inversion? Inversion is nothing but, suppose you're expecting a low in the market on one specific time zone. Market does the exact opposite, right? Market does the exact opposite. That is called inversion. Time zone does not change, but your expectation of swing low will change. The exact opposite happens. That is what is called your inversion. All right. So here, the price action was completely confusing. It was like a triangle, or whether it's going to be a, a pullback like this, then we get a new fall down like this. It is completely confusing at that time, right? In this time zone. Question is, if it's a low, if market is telling us a low, can it be a new swing low? No, that time does not tell us. Time does not tell us that. Time only tells a low. It can be a higher low or a lower low. That it does not tell us, right? So now, how did we tackle this situation? Before that, we had some important knowledge. What, near the 10th of March, what did I tell you? That 12th and 13th of March is so important. It's crucial. It's literally critical for us. Why? Because one situation is, it will tell us whether the monthly low was done at 4th, and we will rally till the last week. That is one scenario. Or second scenario is that either monthly high will be done here, and then we will keep falling down till the last week. These were the two paths from the 12th and 13th. What did the market choose? Market chose to make a sharp consolidation end, and exactly at the end of the time zone, market started a fast rise in the market. So we saw a good rise. But again, this is a combination of two time frames. This is one of the weekly time frame. This is a daily time frame. I have already discussed this in detail in the time cycle video. If you want to go have a look at it. Now, this is a major time cycle zone. Major time cycle zones can give major movements in price, right? We had a very strong move in the market until when? 25th, correct? Let me just check it again. Yes, 25th. 24th and 25th date we had before this low was made, right? On 3rd of March itself, we had 24th, 25th, and then market took a small turn. And this also is in your minor time cycle zone, right? So this is how confluence of time is useful. This is how confluence of different methods of time analysis is being used here. One small image I'll show you, but keep that in mind that this is a totally different time analysis method, which I share in the public. These are the levels which I share, time and price levels. So what happened was we had full confusion here of what market is going to do. Here we used your weekly Nifty levels, time and price, and we got two important your vibration levels. And this first vibration level was approximately near your 22,526. Sorry, 22,565. Right? So 565 was the first level. Second level was 22,676. So 22,676 was the next level. In both the cases, what is the use of vibration level for us? For us, vibration level means that if market sustains above it, we will look for a bullish setup. If market sustains below it, we'll look for a bearish setup, right? So with the help of this, we had very good clarity that market was sustaining above both vibration levels. One is enough for us, right? One is enough for us. And this helped us give an opportunity to catch this entire rally to the top, right? 600, 700 points. I think it's from the second vibration level of 22,676, nearly 1,000 points. More than 1,000 points opportunity was there in the market. But question here is, I don't expect, and I'll be very honest with you, I don't expect people to catch it. It is not possible or not practical for everyone to catch the entire rally, right? So all I share is for my research, which I'm trying to put out there in the market, where people can learn, they can be inspired. This time analysis, if you understand the value of this, right, the entire time cycles, this entire FRVP matching time and price, it's, imagine if it goes into the hands of these nowadays influencers, gurus, how much do they sell one small things for? They already sell all the small candlestick patterns for 40,000-50,000 rupees. People pay that also just to learn candlesticks, advanced patterns. But from the new year itself, we had all these dates, right? So now let's get back into the market. Let's look at what market is doing right now. What is the structure here? Very simple. I want 24,000 to be hit. That is my desire at the moment. 24,000. How does the market do that? Is the simple question. From here, 22,384, right? If we are considering this as a triangle, then we have to consider this as a C wave. All right. Triangles are formed in wave 4 and wave B. Some wave 4, some wave B. But obviously, this is not a wave 4. This is, you can mark it as a possible wave B triangle where A, B, and C. Right. So all this analysis which we are doing right now, price analysis, has been taken from your Elliot Wave master course on YouTube. It's available in 4 languages. You have to study that if you want to progress further in your journey. Right now, very simple. If this is an impulse pattern, you take either one, two, like one wave, one here, wave 2, and then third wave. This is some 3.4 and 3.5 will come, or else some fourth wave we are expecting. So if this is some fourth wave, what is the pattern fourth wave can form? Fourth wave can form any pattern. I'll go down in deeper. Right now, I'll just explain the outer scenarios, the basic general case scenario. So we have 38 to 50% zone, right? As per the Elliot Wave master course, we want price minimum is requirement is done, right? It can go sideways also like this. We don't know, right? Right now, what do we want? We want price to at least come here and then bounce again. It will be very, very good for us. And then bounce again. What is the issue here? What is happening actually in the smaller time frame? Here, what is happening is, if you go down to a 15-minute chart, let me take out all the drawings. Before I do that, let me just show you that there was a fall in the market. Good. From 23,869, there was a good fall in the market. But this fall, it stopped before a gap. Now, if you take the gap from this level to this level, or you want to take gap from here to here, that's up to you. No issues, but I've drawn both this. I've taken this and I've shown you that there is a gap which the market came all the way here and just bounced from here. It did not touch the gap. It did not fill the gap. Okay. Why did it happen? Was it left out intentionally? We don't know that. All right. Anyway, here, structure. I want to show you something different here. Now look at this structure. We will compare this structure with your both sides. You see 15-minute chart Nifty, 15-minute chart Nifty. What I'm going to do right now is I'm going to change the right side to Nifty futures chart. All right. Have a look at Nifty futures chart. How does it look? On the right side is your Nifty futures. Okay. On the left side is your spot chart. How does the future chart look? This, okay, it is telling us some image. There was a consolidation here during the expiry day. Market goes up. This can be an ABC pattern. Then there's a new pullback down like this. Okay. From here, market can continuously go down further, or like this WXY pattern. There's another pullback here, then another WXY pattern. This is some information we're getting from the futures chart. All right. There is something called your adjust price for contract changes here. On the bottom of your screen, if you see BADJ, what does it mean? Adjust, if I just hover it, adjust for contract changes. If I click it, look what happens to the chart of Nifty futures. Okay, it's changed, right? So all that gap up which came here, it was because the contract shift happened, right? From March contract, we've gone to the April contract, right? There was a contract shift in the market. Here, if you see, that contract shift has gone. All right, the contract shift has been adjusted and price action is being shown now. So what does this price action tell you? Now we have seen the first one, now we're seeing the second one. Second one is telling us that market gave us a dip. It went into a sideways mode, fell down. We had a pullback in the market and the swing low was broken. Here you see the swing low is not yet broken in spot chart. In this case, the swing low is broken. All right. It is confusing us more of what can happen in the market, right? So what we'll do right now is we'll take some more advice from your foreign brother of Gifty, right? So Gifty, we'll see what Gifty is telling us. Now, again, there was a contract change. There was a huge gap up. So without adjusting for contract, let's just look at the price structure. It is similar to your futures chart, right? It's similar to futures chart. Market gapped up. Now it's falling down. Some sort of a price action which indicates a sideways momentum, something like that. Let's do the contract shift. Let's do the contract shift here. Let's click the button on the bottom right side and we'll see what happens. Okay, this is exactly like your futures chart, right? This is exactly like a futures chart. Market came down, gave us a pullback, and then again a three-wave pattern. Again, three-wave patterns, three waves patterns. Everywhere you see there's a three-wave pattern. This is one three-wave pattern. This is also a three-wave pattern, right? So far, that is what it's telling us, right? A lot of three-wave patterns in the market. But if you look at your spot chart, I'll tell you, I was laughing when this pattern was happening. There is no correlation at all. Why? Let me just show you. Let's go deeper into the analysis of what the hell is happening in your spot chart. All right. Manipulation or not, you tell me. We'll go down to a 5-minute chart. If you see this rise from here, all right, if you see this rise from here, it's a beautiful rise. Market goes sideways. Okay, let's say expiry game, whatever. And then there's a sudden sharp fall. Okay, understood. This sharp fall has come for approximately 60%, 68%. All right, let's assume that it is some wave A and this is some wave B. Let's assume that. Then we see another three-wave pattern which breaks the high here slightly. All right. So three-wave pattern, it cannot be wave C. So what is it? Possible market can come down. It can come down as an irregular flat pattern, or we can see an expanded flat pattern. Understood? Done. Now what? So we're expecting an expanded flat pattern like this. Okay. So we're thinking this is an A wave, this is a B wave and C wave, right? This is what we're expecting. What happens here? First, before that, let me just highlight that this wave which gave us the rise here, this has not done 78% extension also. We take it like this. See, there's no 78% extension. So this is definitely not a C wave or a three wave or nothing, right? This is nothing. You can't consider this. You have to consider this as a part of this previous one only. All right. This happened. Okay. This also looks like some sort of a three-wave pattern, but let's consider this so far as an impulse. Okay. First case impulse. So if this is your down move, B point A, and this is B point B, and this is B point C. All right. So in this case, what happens is market after a C wave, it has to finish, right? So we are doing this A wave, your B wave, and then C wave. Comical part here is that the market gives us a rally and comes back and breaks this low again. So on a spot chart, I don't know what is happening, but it's totally lost it completely. The only explanation we have here is that this C wave is not yet finished. It can go into a diagonal pattern like this, right? Some sort of a diagonal pattern. That is the only explanation we have at the moment. There is no other, we can't expect to do anything apart from this and look at the structure at the moment. Right now, if I just zoom out, it is very clear that there is some sort of a consolidation happening after a fast move. After a fast move, there is a consolidation happening here. So in this case, what happens is a previous trend always continues. So if you connect what I told to the higher point, there's a pending gap, higher time frame. We want 38 to 50% zone to be retested. All right. We want 38 to 50% zone to be retested. So in case market does something like this is also fine for us. All right. Only thing we cannot predict is if market goes completely sideways. This is something we cannot predict. Now, to this confusion, let's add some time analysis. So smaller time cycles in my research, we have one towards April 1st to April 4th. Okay, 1st to 4th, we have small time cycle here. So on the first or second morning, if there's a trend change, if there's a small trend change, it can continue all the way to 4th, right? It can continue all the way to 4th. If market does the opposite, suppose we have a up move here, right? And then it completes on second morning or something like that, then we can see a opposite change direction towards 4th. This is what I have in my, this is a smaller time cycle. What is the big issue here? What can disrupt this? Here, second is an important date, April, because there's the tariff, right? The Trump tariff, call it TT. The Trump tariff, you can call it TTs. This Trump tariff, or it is going to be implemented globally. And the question here is, many people are creating this narrative. I mean, it's not yet come in the mainstream media. I'll just tell you that I'm telling you before it happens, that if this Trump tariff is imposed 100% as per plan, 100% as per plan, then market will try to trigger a sell-off. This is the justification of the sell-off they'll give. But if this tariff is only implemented half, 50% or 25%, okay, on as that is not as per plan. So 25% of the plan. Suppose, for example, if US is planning a tariff of 100% on any country, right? Let's say China, and suddenly the idea is shifted. This is as per plan, 100% as per plan. It's shifted to 25% only. So now we'll decide later in the future, so on and so forth. That we can trigger a short-term rally in the market, right? So basically, it means that the Trump administration, what I think, it wants to its vote bank, it wants to appeal that yes, we are doing something regarding tariff. At the moment, we cannot do everything, right? Again, this channel is not for political discussions. I'm just sharing my views on how we can connect this to the market. So regardless of all this drama, we have 1st and 4th right? Important dates. So I'm not telling you this is a rally or anything. I'm just telling you first and fourth, this is an important time cycle date. In between, we have second. So there's going to be a lot of confusion next week. Already, I can see the structure is a little bit broken. What do I want to see? I've told you I want to see price to bounce once towards 24,000. It is creating this kind of liquidity areas. So usually what happens is in such some cases, market comes and touches this part in some cases, right? So in case of an extreme bearish scenario, what do we consider in the market as is that this can be a three-wave pattern. A new pullback has started, right, towards this level. In future, your textbook gurus will come and tell, oh, neckline, inverted head and shoulder, this thing, that thing. They'll come and tell you all that. But right now, my focus is not on inverted head and shoulders. My focus is on 30 to 50% zone. This is what will tell us whether market reversal has started or not. From where did I draw this? From 22,300 to 23,869. So if market is sustaining above this and we make a new high, later in the future, we'll have to do this again. We'll have to readjust this and look for reversal setups. But by the time we will have a different sort of a confirmation, we'll have time confirmation also of what is happening. But for now, it is important that stop thinking about big moves in the market, that big moves is over. Time cycles is very important. We are approaching some important time cycles. We'll discuss that. There's a small minor time cycle which triggered this move here. So it can complete towards the 8th and 9th. We'll talk about that. I'll talk about that in the time cycle video I'll upload for the next 3 months. I'll upload the next quarter. I'll upload the time cycle. So for the first quarter, we discuss the time cycles from the first quarter, as in not financial quarter. This is a different quarter, not again your 30 ml quarter. January to March. Now April, May, June. I'll share with you the dates, and we'll discuss that in another video. Right now, small announcement. This intraday time zones, and I think many of you have found it very useful. I know personally many of you have messaged me. The intraday time zones, the super trend, the vibration level concept, everything was well and good so far. Your weekly time levels and all this was very good. Issue here was that people have started distributing this in private groups. The issue here is that people have started trading using it, and that is the issue. I cannot recommend, I cannot be involved with you making your decisions in trading directly or indirectly. In the private groups, what happens is people give a consent through the Google form. They sign, they agree to the terms and conditions, then they will not use any levels or any analysis or any research for trading, right? They give a consent. Here, when I share this in public, right, in public, I don't know what people are doing, and in return, people are sending their profit screenshots. I've told many times, please do not share your profit screenshots with me. I am not interested. All the hard work is yours. The good profit or bad profit or less profit, whatever it is, it's up to you to decide and with your financial advisor. But still, people have started using it for trading, and especially the copy paste gurus who are in that group, then the Telegram group, they're using these levels and selling it, and that is causing a major issue for me. I cannot right now at the moment. I have to stop sharing these levels in the public domain. I can share it after the day gets over or after the week gets over, but before it happens, I cannot do that. Private group, yes, I can, because they have, all the members there have given me a consent that through the Google form, they have agreed to the terms and conditions that they will not use it for any trading activity, right? So this is the small announcement regarding this. And going forward, I will try to find some way to help you guys. Don't worry, those who have been connected for a long time, they know that I don't give up on you guys' learning process. I have never given a call buy and sell signal in any of my groups. The only thing here I wanted to tell you is that there are certain guidelines from the regulations we have to follow, and some things to safeguard my own activity in the markets. So keeping that in mind, right now I'll just share these levels temporarily only in the private groups, and at the moment I cannot post this in the public domain. All right, so keep that in mind, guys, and keep this also in mind that future we will try to find some solutions for this issue. All right, thank you guys, I'll see you in the next video, and we are back with all the YouTube videos, all the content, all the learning. Don't worry about it, you won't miss another major month like March. See you guys and take care.